Okay, folks, welcome to Sunday Night Futures Live. Welcome another trading week set to begin. What we're going to do tonight, we're going to go over the opening price action of the futures. Then we're going to segue into earnings that are coming out this week. Some potential trades, option trades, short strangle trades, maybe some naked call writing. But we'll be somewhat active. Last week was a very, very good week. And I put out best stock charts. I went over all of our trades last week, so please check out my videos on YouTube and on the website. I posted the best stock charts there yesterday, and I just did an analysis of Amazon stock. So please check that. I posted it literally a half hour ago. We're also going to go over tonight the GDP number for last week and why it's complete and utter BS when you factor in the amount of inflation that we're seeing in the system. All is not what it seems. And we're going to go over the valuations of the market. We'll take some chart requests. It'll be a good night. Let me say hello to people. Talon, hello from New York. Good afternoon from California. Falcon, good to see you. Larry, Zoom, you got it. You're welcome for an Amazon. Abel, Fastly chart. Yeah, they're coming out this week. Yep. We'll take a look at it. Okay. We're seeing some people float in here. Quiet night so far. But let's begin. Clark, hello. Let's begin with, hey, Ant. How you doing, brother? The NASDAQ 100. Very, very troubled index. Did not have a good Friday. And we are up at current. Slightly. This is a 4-hour chart. These will all be 4-hour charts unless I say otherwise. We have a bit of a W formation forming here. The question is this. We put in a lower high. We haven't put in a lower low yet. I'm not going to set an alert right now because I don't think it's going to happen this evening while we're live. Okay. So, NASDAQ looking good here. The Russell 2000, of which we are short, it is up a 0.25 percentage point. I was working outside all day, so I'm a little bit dehydrated. Higher lows here. So the Russell is looking pretty good as we begin the new trading week. Where are my S&Ps? There we go. E-minis looking good. They are up. I'm going to want to circle back prior to us logging off to take a look at these and how everything settles out. So equities are looking pretty good thus far. The US dollar, which was a complete and utter basket case last week, it is currently up. But I think we've seen the death knell for the dollar. And I'm going to go over a weekly chart in a moment and talk about that. Hi, Jody. Gay, how you doing, buddy? I'm echoing. Is that for everybody? I don't know how to stop that. Let me see. Is everybody hearing an echo? That's accurate. Okay, cool. Thank you. Yeah, Gabe, maybe your speaker settings, or maybe you have two devices going. Okay, gold. Gold had a rough day on Friday. The miners did very, very well on Friday, but gold very rough. We had a breakout here on the 28th. Happy August, by the way. Can you believe it's August? Broke out above resistance on the 28th. What did we do on Friday? We broke back down. The miners didn't care. The miners didn't care. They were on fire. Rallied off the lows of the day. Thursday, very good day. What else do we have here? Silver. Silver, where are you? I just picked it up before. Come on. Silver is up at resistance. Let's check out agriculture. Corn, very weak. Very weak. Soybeans, they're up, but they're weak. We'll leave it off with wheat. Wheat looking a little bit better. Wheat's going to take off. Wheat's looking good on a weekly time frame. Let's see what else we got here. Let's check out gasoline prices. I want to take a look at the weekly chart. We had a bit of a breakdown on gasoline. We broke support here, rallying back. Still a healthy chart. Light sweet crude. Kind of weak. Kind of weak. Let's just say it's paused. Threatening a breakdown here. We're consolidating. Let's just call it a consolidation and retest, and we'll move on. Let's see what else we got. We did the dollar. Let's do bonds. Yields are pressing up higher. That's why you're seeing the NASDAQ 100 move up higher. Excuse me, bond prices moving up higher, pushing yields lower. That's why you're seeing the NASDAQ 100 move up higher. Okay. We did gold. I think we're good here. We got a feel for what's going on. For the most part, what we're seeing is strong equities, weak agriculture, precious metals, mixed bag. Bitcoin, well above 40,000 again. We did hit my price target on Bitcoin at around 28,800. That was pretty much the bottom, and now it's rallied back, and Bitcoin looking very, very good. Very, very good. Here was my price target right down here. What was the low here? The low, 29,215. 28.8. The low was exactly 28.8 back in June. And it looks as though we're getting ready to press to new monthly highs here on Bitcoin. What was the high last month? High 41,950. We could be there by the end of this broadcast. All right, let's go on to let's go to comments first. Hey, Randy, how you doing, brother? Oh, good. Gay, you're good? Okay, good. All right, let's go to the setups for the new trading week. All right, so here are the main earnings reports that are coming out tomorrow. We have Ferrari coming out in the pre-markets. I traded an options trade on that last quarter. Very illiquid options. I'm not going to repeat that again, or I can't repeat it. The option markets are closed. We're not trading Ferrari this quarter. I don't like any of these trades as option trades until we get to Roku. Fastly, I'll entertain. Square on Thursday, Cloudflare. We played that last quarter. Options trade a short strangle strategy. We did very, very well there. Beyond Meat, maybe. It all depends upon the liquidity of the options. We need liquidity. I want to be able to get out when I want to, and not have these market makers play with you. They play games. DraftKings comes out on Friday, and those are the only ones I'm really interested in. I don't play options on pharma stocks unless they're long and it's very defined risk. So these are our earnings reports coming out this week. They're not the big mega cap, for the high tech names, I should say. They're not the big mega cap names. Pardon me, I'm eating almonds. I'm trying to drop weight. All right. Shoulder PE ratio. We go into the week pretty much unch, 38.18, second lowest highest since the dot-com bubble back here. Very expensive market. The Buffett indicator, we remain strongly overvalued. At 2.9 standard deviations beyond historical norms. So crazy. This is so nuts. So this is how we're going into the new trading week. I mean, Facebook did not report good numbers. Amazon, good EPS, horrible top line number. Forward-looking guidance, no bueno. So Amazon, which I actually bought on the dip after earnings when they were crushing it, that thing just kept falling. There were no bids. So we're probably going to do an options trade on Amazon. Probably as a short strangle. I went over it on the Amazon video, so if you want to go check it out, it's listed on YouTube, soon to be listed on the website. Economic data from last week. So, durable goods, a big miss. They expected 2% rise, actual 0.8, non-defense 0.5. S&P Case-Shiller Home Price Index, a rise of 16.6% year over year. Inflation. The CPI. Okay, excuse me. CPI, I got inflation on the brain. Consumer Confidence Index. That was a beat. A lot of people spending money out there. The advanced trade goods, 91.2 billion versus the prior read of 88.2 billion. This is basically our trade deficit. And this is a historic number. We've never been this high. Expect this to get beat probably next month and the month after. We don't produce. All we do is spend. We know how it happened with Jay Powell. Inflation is going to rise. Initial jobless claims higher than what was expected. No great shock. Here's where things get interesting. The GDP. Now, the GDP they expected. Remember, GDP, this is just the reopening of the economy. relative to the prior month. So it's not as if COVID didn't happen and we're growing the economy by 8.5%. I mean, that would be an astounding number. 6.5% would be an astounding number if you X'd out COVID. It never happened. That would be, wow, this economy is in fuego. We're really producing a lot. No, no, no. We missed by 2 percentage points. Now, keep in mind what the GDP is comprised of. Gross domestic product, this is from Investopedia, is the monetary value of all finished goods and services made within a country during a specific period. This is a Q2 quarterly view, and you got to adjust for the deflator. And the deflator for Q2 was 6.1%. What's the deflator? The gross domestic product implicit price deflator, or GDP deflator, measures changes in the price of goods. Inflation. It's in line with the CPI numbers. They're basically the same. So if GDP is influenced by the monetary value of finished goods, well then the economy really only grew on a production basis by 0.4%. Everything else was inflation. And if you take a look at consumer spending in the month of June, we rose. We beat the expectation by a wide mile. We rose by 1%. But personal income, which beat, but it only rose by 0.1%. So what do we interpret by that? Well, people are either A, going to credit cards, or B, they're starting to spend the stimulus money that they took in and they threw it in their savings account, because the savings rate when the stimmy checks first came out went through the roof. People weren't spending it. They were either going into the stock market or it was going into the bank. Now that the economy is opening up, people are going out again. They're spending that money. So you're seeing a trade deficit widen out, as you saw here, advanced trade goods, and you're seeing inflation on the rise as reflected in the deflator. So this economy is bananas. It's a basket case. So what the Federal Reserve wants you to believe is that spending is good. No, production is good. That's a strong economy. The measure of a strong economy is not how much the consumer spends. It's what they produce. The government is paying people to stay home. We have unfilled jobs, and now they want to go spending not just $1.7 trillion on infrastructure, but another nearly $7 trillion more on all giveaways. It's a wealth transfer. It's going to be a nightmare. They're negotiating the bipartisan deal, the uniparty deal, this weekend right here. They're probably going to have a deal on the $1.7 trillion. Nancy Pelosi is holding the House of Representatives hostage, and they want that additional $7 trillion. So roughly $8.7 trillion in new spending coming down the pike. Get ready, folks. You're going to see inflation rip through the roof. Talent, sell Amazon puts. You can. You can, but make sure you're using the probability calculator. I would prefer, rather than just purely selling the Amazon puts, put on a hedge to the call side and create that short strangle. So that way, if your put side is getting tested, your call side is working for you. And you can always roll down that call side if your put side gets tested. So I wouldn't directionally trade Amazon using naked puts right now. I would open up a short strangle. Less risky. All right. So that's inflation. Economic data coming out this coming week. Chock full. We have the manufacturing PMI coming out on Monday. ISM manufacturing index, construction spending, big day tomorrow. Factory orders on Tuesday. Oh, jobs week. We have the Pimp Mac Daddy of them all coming out this week. Non-farm payrolls. Ain't that going to be interesting? We have the government paying people to stay home. This is going to be interesting. ADP employment, that's going to be the preview for Jobs Friday. Initial jobless claims as we get every week. Notice how the expectation is now inching back up. Now that we're seeing results back up above 400,000. It was ratcheting down sequentially. Now it's going back up, the expectations. Crazy. Absolutely crazy. Watch average hourly earnings and watch consumer credit. If you see a flat consumer, if you see flat hourly earnings or declining average earnings, yet inflation's going on the rise and consumer credit continues to expand, guess what people are doing? They're blowing out their credit cards again. Let's do some chart requests. I gotta go to the members area, folks. This is going to be brought to you, folks, by TrendSpider. Automated technical analysis. Use the link below if you want to get 35% discount code. Automated trend lines. Scanners. I got to log into my own website. They have a demo tour on their website. Use the link below. Get taken over there. And they have a 7-day free trial offer. I give it away free to our silver and gold level members. Now I'm in. All right, let's see what our members requested. Ticket cloud. All right. Oh, I have nothing up. Okay, good. Let's go to, let's create a list here. ZM for Larry, FSLY for Abel, Tesla. Hey, Pat. How was your trip? You're home now? Ben, BIGC. Twitter. The Communist News Network. McDonald's. Another commie organization. Coin. Oh, you still on the road, Pat? Good for you. Can you explain Dole, why they repeat IPOs? Dole, the pineapple company? All right. Talent, I cannot go over the ride sharing companies. There could be a perceived conflict of interest, so I'm going to have to pass on any ride sharing companies. My apologies for that. I've been asked before. I've never analyzed those charts. Okay, let's begin. Sorry about that, Talon. All right. Zoom is looking good. This is a monthly chart. And this thing got nearly halved. Wow. All right, so the COVID trade came off. We're at resistance. We bounced right off of it last month. 274.30, really good support. There's another support level I like right here. 302 per share. We're kind of sandwiched in between a trading range with a bias towards the upside. I'll check the weekly chart and the daily chart, but I don't know if from the monthly chart I would not buy the stock right now. It's already had a run. It's already up and into resistance. I like the Stokes. They're beginning to hook back up again. And they are back, well, at least the fast line is back up above 50. Weekly chart. The weekly Stokes look very, very good. My concern here, again, is with this resistance level and the potential for a lower high. So let's call 400 resistance. Volume has been good. 2 weeks of good rising volume. What's going on here? That was weird. Okay, let's try that again, Bob. All right. So here's your trading range on Zoom. The lower band rising. So at current, the lower band of support is at around 354. So we'll create an alert there. Keep a little bit of sensitivity on. So anal. And we'll keep this active for 30 days. I like the company. And the only other way I would trade this, I'm going to go to the daily chart really quick and absorb it. Yeah. Bearish reversal bar on Friday. A rejection at resistance. So the only other the only other way I would trade this is if we closed above resistance. That would be very, very cool. Long entry or add. The add assumes that I bought down at support, and we'll look to add more on the breakout. And we'll keep that active for 35 days. And we're good. So short-term bearish on Zoom. I think we're going to get a pullback and a retest of that rising support level. So I would keep an eye on it. And that's your best risk-reward entry point. You have moving averages, which are flattening out. They're going to rise. Maybe they'll act as support. But I'm not a big moving average guy. A lot of guys are. I'm not. I like historical support levels and trend lines. So that's my take. Sticking to it. Let's go to Fastly for Able. I have a bunch of alerts that were fired off here. Oh, let's check this out. Did we get hit? We did get hit on this. Oh, yeah, that's right. I was watching this. Yeah. It broke support. That's right. Now, they are reporting earnings on Wednesday after the close. Let's get rid of this. Okay. Let's go to the monthly chart. Let's get a feel for how far we've pulled back. I would not buy the stock in advance of earnings. If you're looking to speculate to the long side, you know, the options are going to be very, very expensive right now. The implied volatility, because you're going to have a lot of speculators in there, opening up spreads, buying up options. This is why I like selling options during this time, the earnings season, because the implied volatility is just so fat. And the next day after earnings are reported, you have implied volatility crush, and you make money on that. So this chart here, we broke multiple support levels last month. Now, earnings is considered a binary event. So if earnings come out really strong and we begin to recapture some support levels, I would get bullish. But I would not buy these shares. Not that I would never buy any stock in advance of earnings, unless, of course, it was extremely oversold with like RSI in the low teens or single digits. So I would wait until after earnings to open up a trade, either long or short. To me, absent earnings, I think we're going to break to lower lows. Because, I mean, with this reversal bar here, after horrible price action in May, good reversal action in June, then we had another inside month. I mean, and then we broke down and closed below support. Not good. Not good. Weekly chart. Weekly chart, we broke support. They tried to rally it. They tried to salvage the month. They couldn't do it. RSI continues to decline. And this is a perfect example of when you have Stokes down below 50s, rallies tend to fade. We faded here, we faded here, we faded here. Use your Stokes. I would not buy this stock right now. Daily chart, it's a basket case. Maybe earnings will salvage it, but technically it's not looking good right now. The one thing I will say is this. Stokes are improving on a daily time frame with higher lows, but the fact that we're breaking monthly and weekly support levels, daily support levels, you know, there's so many other better fish out there to go fishing for than this one. I would wait for a major sell-off and an extreme oversold condition. You may get it on an earnings announcement. Where's my RSI? Where's RSI? RSI possible, higher low, but still trending down. How do I get this off now? Oh, sorry, I just lost track of all these buttons I have up here. There we go. Okay. The next chart up, Tesla. We booked profits on a short strangle trade last week on Tesla. The monthly chart looks very, very good. Very, very good. Consolidated, multi-month consolidation. Man, if we got to pull back to 651.50 per share, that would be exciting. The problem with Tesla is that it's on a it's near a resistance level at $700 per share. right here. And these Stokes are going in the wrong direction. This has got to get resolved. Weekly chart. Really good week last week. We reversed off the lows. Earnings are in the rearview mirror. You can see that got stopped dead, just shy of resistance. Stokes are looking very, very good on a weekly time frame, trending in the right direction, moving up higher, higher lows. Do we have higher highs? Not yet. Trading range, but I think we're breaking out. Daily chart. You need a pullback here or a breakout, one of the two. You can see that the automated trend line is picking up another resistance level. Watch the red line up top above my manually drawn one. So just keep that in mind. And that's at around, this is rising at around $707 per share. Is there another support level worthy? Yeah. Last week's lows. 669 per share. We're creating an alert there. Watch for a breakthrough, just in case. A little bit of sensitivity. And we'll keep this active for 30 days. That's Tesla. Looking good. You just need to pull back on it. We're too close to resistance. I would not buy unless, of course, we broke out. But just keep in mind, again, you have two resistance levels above. Here at $700 per share, and then at 707. What else do we have? BIGC. Big lots. Oh, big commerce. I went over this one before. Hit support, bouncing, spinning top formation last month, down month, but all down months are not created equal. This is pretty bullish. Did we break out? We did. We broke out last month. So we broke out in June, pulled back, retested, not one support level, but two support levels on BIGC. Very nice. Very constructive. Weekly chart's not looking so good. We're retesting support. You can buy here, but just use a tight stop under last week's lows. God damn it. There we go. Because if we fail to hold support here, we're coming down here to around $58 a share. Daily chart. I think this could be bought. And the only reason why I would buy the stock is because of that monthly chart, how we closed out the month. So this is more of a macro trade. It's not a short-term swing trade. In my mind, I'm looking out several months on this trade. It's definitely a position trade, an investment, if you will. So definitely not a short-term swing trade. You're going to have patience. Build on strength. What else do we have? Twitter. I hate the company. I hate this company because they're communists, in my own opinion. I guess I have to say that. But I got to say, the chart looks good. It looks very good. They had good earnings last week. They rallied on earnings. I believe we have a breakout. We do on a monthly time frame. Gotta like that. Stokes hooking up. Weekly chart. Weekly chart's good, consolidating at the near the lower end of the spectrum. Lower band here at around 64 bucks. Upper band up here at around 82. Risk reward very favorable. Daily chart. I think it's going up higher. And you can see here, I'm going to take off, for those, here, I'm going to take this off. Here are the automated trend lines. All right, so I had my drawings up, but here's what the algorithm's picking up. You have support down here. For giggles, I'm just going to create an alert here, just in case we get a pullback. And what I would do is this. At this upper band here, if I were to get long on a pullback, I would want to set an alert up here just in case I wanted to book swing trading profits. And keep that active for a while. And we're good to go. I love the Stokes. Really good. Higher lows. No breakout yet. But close. Oh, actually, the fast line is breaking out. Has broken out, should say. So Twitter looking good. Bullish. Big oil charts look bearish. Yeah, and you've seen the correlation. Normally, the correlation between oil and the big exploration stocks is, was at like 95, 98%. That's really breaking down now because oil traded up last week and last month, yet the oil stocks still took it on the chin. So there's a divergence going on there that can't be ignored. Next chart, MCD. Jody, you don't use Twitter anymore? I don't blame you. I'm changing the website. I'm having what's the other one? Parler added the icons at the bottom, and Rumble, and Gab. Eventually, I'm going to get banned from YouTube. I know it. There are guys that are more outspoken than I am. They'll ban them first, but eventually they'll get to me. Twitter too. All right, MCD. Good looking chart. Monthly time frame. Great month last month. Here's the automated trend line telling you. Take them off. Press of a button. Boom. We broke out. Now what we'll be looking for here is a retest. Jesus Christ, Pop. And we'll keep that active for a couple of weeks. We should retest this week. Weekly chart. Yeah, we broke out the prior week. We did a retest last week. The chart's looking good. Daily chart. It got a little bit extended. Let's take the heat map off. Got a little bit extended. It's pulling back, consolidating. I would wait for that weekly retest. But overall, good looking chart. Bullish. Coinbase, we own this. All right, so there's not much data here, but the month you could see that we're forming a very, very solid base. We've stopped going down. That's rule number one for when you're buying a stock that's been annihilated. Kathy Woods bought all the way up here. I bought all the way down here. That's what you're supposed to do. Weekly chart, bit of a spinning top formation, near resistance. Daily chart. You can make the argument that we broke support. I'm going to go with this data point here because you have a volume shelf right here at 234.41 per share. That should act as support. It's looking good. Bullish on Coinbase. I would look to add more. I already have a position, so I'm not going to buy more now. Why won't they let me set an alert here? Sometimes you try twice and they let you. There we go. No, they won't let me. I would buy on a breakout, add more. But this can be bought. If you don't have a position right now, you wanted to buy it, I'd be fine with it. I think it's a good-looking chart. All right, how much time do we have? We have like 12 minutes left. I could take on more. Yes, Will, smash the like button. If you could, folks, please smash that like button. Click the follow. What do you call it? What are you doing? I'm so horrible. Subscribe. Hit that bell button. Hit every button. Hit every button. What else we got? Cat. This is a cyclical play. Yeah, the automated trend lines of such value. Okay, so without the automated trend lines, we broke support last month. Let's get rid of this. Now let's throw on the automated trend lines. Pop. This is where I would look to buy. This is where we're going. I'm going to reduce the sensitivity. If yields begin to creep up, cat should catch a bid. Weekly chart. Yeah, not good. Not good. They keep trying to break it out. They did here, but then it failed. Then they retraced it back down to support. I think that we're going to be in this trading range for a couple of weeks. Stokes are nearing very oversold levels. Where are we at? Pretty oversold. Possibly a W formation forming on Stokes. Price action, I think it's going to pull back. I would want it to pull back further. Daily chart. Possible higher low. Let's throw up the automated trend lines. Woofa. All right, so you can see that what we did on Friday, we bounced off of not one support level, but two support levels. So the daily chart's beginning to firm up here a bit with higher lows. And we'll keep this active for 10 days. And we're good to go. Let me just check my sidebar. I want to check on seasonality with CAT. This data goes back 14 years. August is not a favorable month. It's one of the worst months of the year. But September is one of the best months of the year. So if you get a real washout on CAT, that's your opportunity. Possible seasonality trade moving into September. Show patience. Rick Roofing. Hey, brother. Good to see you. Pat Tilray. We broke support last month, Pat. We put in a new monthly low. We even undercut the lows of May, but we rallied back. $13 a share is support. I don't like the monthly chart. Weekly chart. They tried to rally it on Friday. They faded it. Right at resistance. If you're looking to buy it, Pat, I would look for $13 to get retested again with a tight stop right below. Very speculative. Very, very speculative. You know, you would have hoped that we would have put in a higher low back here. That would have been great, but we didn't. We failed to hold support, broke down. 13's got to hold. If it breaks 13, it's probably going a lot lower. I would avoid this. King, welcome aboard. All right. Wheat. This is the Tetrium Fund. It's a monster. It's a monster. This is going a lot higher. We broke out on the month. I mean, what a volatile month last month was. But we rallied back strong. Inflation is here, man. It's a monster chart. It's just waiting to rip. Stokes are hooking up. I'd like to see them above 50. I think it's a buy on a closing breakout. Above, let's call it $7 per share. Daily chart. Oops. You're right in a wedge right here. This is an automated trend line. I'll take it off and I'll show you. We'll throw them back on. So if we break out, which I think we're going to on wheat, we're coming up here. This is going to be your rising resistance level. It's not that far above. It looks like it's far above, but it's not. So wheat looking strong. I think it breaks out probably this week. Bullish. You're looking to sell? If you need the money, I understand it, but I think that it's probably going up higher. King, I did a video. I just put it out there on YouTube, on Amazon. It's like almost a half hour long. I posted it just before we went live. I went over the fundamentals, the earnings report, technicals, everything. Wow, Pinterest got whacked. I think they reported, don't they report earnings this week? Maybe it was last week. Yeah, I'm not seeing it here. Okay. So, let's go to the monthly chart. Wow. You got to avoid. You got to avoid it. Walk away. This is an outside reversal bar, aka a bearish engulfing. We're probably going lower. Don't be surprised to see them try to rally it back in an effort to try to recapture prior support at 64.54. That will probably be a head fake rally. Don't let them lure you into it. If it closes back above that level, then you could buy. Right now, avoid. Weekly chart. Horrible week last week. I guess they reported earnings last week. Avoid it. It's a short. Big gap down on Friday. We're trading down below the third standard deviation Bollinger Band. This looks a lot like Amazon's chart. We're probably going to get a rally, a bounce on pins. Again, it's going to be a sell the rally event. You got a lot of institutions, not so much with Pinterest, but a lot of institutions own Amazon. They're going to carry Amazon a few rounds. They're going to carry pins a few rounds because they need to get out. So they're going to lure in the retail investor, trying to get them excited. Don't let them take parking space up in your head. They are going to dump when they are ready to dump. As soon as you start hitting these resistance levels, these shares are going to get hammered. So, yes, oversold relative to the third standard deviation Bollinger Band, probably going to pop. I think that they're going to fade that rally. Pat, AMD. And McNeil, you have puts? Good for you. Nice. Very nice. Advanced Micro, monster. Monster. It's a monster. The semiconductor sector as a whole, I didn't want to do that. Shit. Is in fuego. Pat, I'm going to send this over to you. So you had a monthly breakout on AMD. Pat, I want to send you the chart. Weekly chart. Beautiful. You're going to get a pullback here. You're going to get a pullback. But then it's going up higher. Unless the market just rolls over. I mean, outstanding price action here. Outstanding volume action. You got a lot of resistance on a daily chart. These are the automated trend lines. Take them off, put them on. You're going to get a pullback here, Pat. I would not be a buyer at these levels. Allow it to pull back. This is another, I don't think it's going to hit that. $95.63, interesting entry point as well. And we're also testing that third standard deviation Bollinger Band. We backed off of it. But overall, the macro view, very, very short-term bearish, longer-term, very bullish. All right, folks, with that, I want to thank everybody for joining in. Please smash that like button. It helps me out so much with the YouTube algorithm. Don't forget to check out my other videos. Best stock charts for the coming week. I go over our trades that we put on from last week and took off. We did very well. Also, I did Amazon commentary. It was posted earlier, also on YouTube. And I hope everybody has a profitable trading day, a week, I should say. Profitable trading week. And I will talk to you soon. Be well, everybody.